Mayuresh, hi, afternoon. What's the market construct looking like, and what do you think is going to be providing triggers from here for the markets?
Afternoon, Aisha. I think the market looks in fine fettle as we speak, and both the macros and micros, as far as India is concerned, are holding out pretty well for the markets. Having said that, and as the earnings season has progressed for this quarter, a large number of corporates have posted decent set of numbers across sectors. So I think the micro environment probably looks very well placed. Also, from an overall corporate debt perspective, we are around zero point 0.5 times, which is at a decadal low for corporate India as far as the debt levels are concerned. And even within the banking system, the kind of net NPAs that are now present in the system gives hope that earnings should continue to be on a very strong footing for the remainder of this year as well. So I think the base case scenario that is probably getting built in for a 12 to 15% earnings growth might very well continue. Obviously, the next quarter, when elections will probably start, and the order of elections will probably start happening, the expectations in terms of order flows for the capital goods industry probably might get a little patchy. But the expectations for the next financial year remains very, very robust, along with the macro numbers that the Exchequer has also given in terms of both the GDP estimates as well as expectations of a lower fiscal deposits deficit. So I think it is expected that earnings will probably hold up the market because that's ultimately the crux on which the markets hinge upon. Domestic cyclicals, in my opinion, will continue doing well. We remain constructive on banking and financial services because at some point of time, as the rate cut starts happening at the end of this calendar year, I think a strong part of tailwind should start coming back in the second half of the next year's earnings as well. And consumer discretionary, very, very selectively, should start coming up very, very robustly as well. So I think domestic focused and oriented sectors, in our opinion, at Marketsmithindia should continue doing well. We remain constructive and positive on the markets.
That's the comprehensive take on the Indian markets right now. Earnings definitely supporting the move that we are seeing. But Mayuresh, what's your view on Asian paints and the rest of the paints pack?
Afternoon, Anisha. With the entry of the new entrant and the expectations that they have probably laid out, 10,000 odd crores in the next 3 years as part of the top lines, the capacity that the new incumbent is probably expected to get into the market, which is going to exceed the capacities of the number two, three, four player. Obviously, there is going to be a huge action as far as pricing is concerned. So, to that extent, I think a lot of the other players, Asian Paints as an example, has already embarked upon a capex plan to expand its capacities. Berger, Kansa, and Aerolac have also started doing relevant amounts of capex to expand their capacities. So, I think as more volumes start coming through, and with very aggressive pricing that can happen across segments. We are probably talking about emulsions right up till distempers. So I think the entire value chain, right from premium paints to entry level paints, are going to get disrupted as far as pricing is concerned. And that is definitely going to have an impact on the existing players as far as margins are concerned and probably derate some element in terms of the forward P multiples that they were probably getting. So my take is that they will still struggle as this entire phase starts going through in the next 2 to 3 quarters. Is there sufficient headroom for a lot of these organized players to grow? Absolutely yes, Anisha, because I think 35% of the market is still unorganized, and there is huge expectations that organized players will take a larger chunk. But I think over the next couple of quarters, to say the least, there will be a derating as far as forward multiples are concerned, and the high premium multiples, Asian Paints, Kansai, Berger, that used to derive before the entry of the new player is obviously going to come off. So yeah, I think it's going to be a little bit sticky for these players as far as numbers are concerned. So I think I'll be better off looking at other themes into the market. This theme might probably just consolidate for some length of time.
In the
Well, Mayuresh, within the entire Adani pack, which are the stocks that you like at this point of time?
I think this development is definitely going to create a huge sentimental impact onto the stocks, Anisha. And as I've always maintained, I think three stocks out of this entire pack look attractive over a longer period of time structurally. Adani Ports, as an example, where the expectation largely is a large part of the mechanization that has already been part and parcel of their operations should continue growing at a very good clip. And with expectations of global trade normalizing, albeit the Red Sea crisis that we're probably seeing might have an issue for a quarter or so. But I think it should normalize over the next few quarters and improve thereafter, giving a sustainable growth in terms of the number of volumes of the containers that they will probably handle. So to that extent, I think the kind of numbers that can come through from Adani ports can still be better every passing year. And both the cement counters, in my take, Ambuja and ACC, where a lot of capex activity that has been announced by the government and expected to be doing so over the next few quarters should continue at a very fast clip. Obviously, the capacities that both of them have at this juncture and the expectations in terms of more capacity building happening incrementally over the next few quarters at a much lower cost in terms of the brownfield expansion should probably mean better volumes with no additional stress or a large stress in terms of their balance sheet, creating significant amount of leverage over the next few years. So I think these three stocks from among the pack, ports, ACC, Ambuja, on any decline can probably be looked at.
Right. Okay, that's the take coming in the cement sector. But ahead of today's finance ministry meet with